Hey, testing, testing. Hey, hey, hey. Testing, testing. Testing, 1, 2, 3. Everybody here? Whoa. Boo-boo. I don't know. Look at that. Yeah. I don't think I'll need this. So anyways, hey, good happy Friday, November 3rd, 2017. Hey, quick question. Is this trade non-farm payrolls live number 139 or is it 140? I've received both emails. Does anybody actually know? Jack says, have a blessed day. Hey, do you work at Chick-fil-A? Let's get this, back this up. Need my space. So anyways, we don't know, is it 139, is it 140? I suppose we could just say it's been about 12 years that we've been doing this webinar. Thank you for coming today. If it's your first, well, let me tell you, I appreciate interaction, collaboration, so get involved, be interactive, ask questions, comments, all that is welcomed. We only have 3 hours today. 3 hours today. Only 3 hours. So let me tell you how it's going to work, huh? First hour, we got to prep for the news. Second hour, we got to talk about the news. Third hour, we'll do whatever you want to do because you're the boss and I'm the humble currency analyst. Igor wants to know what I expect with GBP. I don't know. Hey, why don't we do some technical analysis? Yeah. Sorry. Breakfast time here. So, let's get going, huh? I can't find my, oh, here it is. Da 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 da. Na 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 da. Bo bo. I think you can see that. Hang on. Stupid software wants to go weird full screen. Hang on. Slideshow settings. Is it this one that I want? Let's try that again. Yeah, booyah. We'll go there. Good Tag, das ist gut, ja. Right, so thank you for being here with us. Well, namaste, Ryan. If you're watching this at FX Street Live or if you're watching a recording and you're way out in the future at 2,400, either way, if you like if you like the webinar today, you like the analysis that I'm doing, I do this every single day for clients. All you have to do is visit tradersway.com and open a demo account, even just a demo account. And there's a link to live webinars I do every day in the back office. So you just log into your demo account, go to the back office, click live webinars, and you're in. And I do this every single day for an hour, hour and a half, actually closer to more than an hour and a half, right? About an hour and a half. So see you over there, huh? See you on Monday. Anyways, let's do the setup. I want to get this out of the way because there's people gonna log in 3 seconds or 3 minutes before the news, and they're gonna want me to repeat everything. And I say, you know what? Why don't you show up on time? Show a little respect. And so we'll cover it now, and then out of honor and respect for you for being here. So take a screenshot, if you will. These are the essential setup. This is the essential setup for my charts. I use MT4 downloaded from tradersway.com. 2155 EMA I use to measure the speed of the market. Yeah, Robert's like, haha, slackers. Yeah, haha, slackers. By the way, think about it. I think it's common knowledge, unless it's new numbers are going around, but I think it's common knowledge that 95% of retail Forex traders lose, right? I don't know if that's true anymore. The market is much more mature. But let's say it's a lot. To me, after analyzing thousands of traders over the last 12 or 13 or 14 or 15 years, it seems like most people are capable, but they're just unwilling or unable to do the hard work. Right? They're willing to do the blood, sweat, and tears for months or minutes, whatever. So anyways, the first thing I want to do is measure the speed and direction of the market. I want to answer a basic question like, which way is the market going? And should I be aggressive or should I be conservative? You see what I mean? Pretty logical. You know what? You know what we skipped? I have to do this. I have to do this. There we go. Sorry. We get to this. This is important. This is important. I have to do this. It's actually required. You have to see it as well as hear it. So let me tell you. Let me remind you that the purpose of this presentation is education. This is not an alert service. I'm not going to make trade recommendations, but I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results, so please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Oh. And once again, if you are a client to Traders Way, throw your diamonds in the sky. I appreciate you. We appreciate you. Thank you for being on my team. Thank you to FX Street for hosting us today. Okay, we've got everything taken care of. Good. So we start by analyzing or choosing or not analyzing, but identifying is what I'm looking for. We start by identifying the direction of the market, right? The direction of the market and how fast it's going there. Because if it's going fast, let's say it's falling fast, I need to be aggressive. If it's falling but falling slowly, I want to be conservative. Got that? That doesn't put me into a trade. That just identifies whether I should be a bull or a bear technically. Now, fundamentally, I might have a different point of view. So what if I'm fundamentally bullish, but the market is technically bearish? How do I handle that? I don't trade. Okay. Pipper is skipping ahead. Pipper says, is the 8 an SMA? Yes, it is. Yes, it is Pipper. But ultimately, it doesn't matter. But that, when you see my charts, that is actually an SMA, but it doesn't matter. You can use whatever you want. Do a 3-9, both SMAs or both EMAs, or it shouldn't matter. Anyways, the next thing is, if the market is technically bearish and I want to sell, when do I sell? Aha! That's a great question. By the way, regular old banana. I used to open a banana here. That is not how monkeys open a banana. They do it here. I learned something new. I've been peeling bananas incorrectly my whole entire life. I'm 28. I've been peeling bananas incorrectly for 28 years. Thanks, Mom. Amazing. Hey, I'm here to share. I'm here to share. So the 5-8 EMA combination will help me identify price action. Is or isn't, is or is you ain't. It doesn't sound right. Is price going up or is price going down? Well, if I think the market's falling, I want to see price rise and then fall back, can continue in the direction of the trend. That's what the 5-8 is for. It's the actual trigger. Ciao. Trend 200 EMA. We're probably not going to get into that today, but to me, it's called fair market value. Okay. Bollinger Bands, if I use them, 2 standard deviations. Oscillators, if I'm using them, I use the MACD and I slow MACD down. And it represents overbought and oversold conditions for the market. Stochastics, I speed up and I use that to identify overbought and oversold conditions for price. Separating price from market once again. So price and market are separated with oscillators. Price and market are also separated with EMAs. Holy snap. Huh? You got it? Jorge's here, Robert's here, Ryan's here, Pipper's here. But a lot of this is just giving me your first initials, though. Anyways. So, glad to have you here, guys. So, quick quiz. That's the 2155. Is the market bullish or bearish? And you're going to say bearish. Here, when you're below the 21, you should be aggressively bearish. When you're below the 55, what I say is, the 21's in control here. Over here, the 55's in control. Okay. So if the 21's in control, you're bearish, and you're aggressive. Well, how do you use that information? Well, that's the next slide. If you're bearish here, you should be conservative, expecting reversal sometime soon. Hey, Brendan. Tuto. Forgiveness. Wow, where everybody's here. Sweet. There's the 5-8. Okay. You see? Can you, look left. I know there's nothing there, but look left with your mind. To the left, the market was already bearish, right? So if you were looking to pull the trigger, you'd be looking for a 5-8 cross, right? Like this. It's the same chart. You would have already been waiting. Neat, right? Here it says take profit, 5A cross up, but you're bearish. Why would you want to stay in if price is rising and you're bearish, right? So this is where you take profit. There's the fair market value. Bears are clearly in control of this market. However, that gets to a point in time when the market becomes way too bearish and you're a bajillion miles from the 200 EMA. At some point, it's going to want to snap back. Kind of like pulling back on a bow. The farther you pull back, the more it wants to snap back into equilibrium. Okay. Oops. There's Bollinger Bands if I'm going to use them. They're important. Yeah. And that's what a typical chart looks like on one time frame. One time frame. Is one time frame useful? Good morning, Martin van Ostrom. And he's like, no, it's not Martin. It's Martin. No, it's not Martin. It's Martin. Martin, yeah. But in America, they say Martin. There's not even a T in it. Martin. Okay. So this time frame on its own is not incredibly helpful. You got to look at multiple time frames. Okay? Multiple. Martin's like, that's about right. Yeah. Martin. Yeah. Okay. So we need multiple time frames, so we'll get into that. So for example, what we'll trade, let's say we're going to trade euro. We're going to use a setup like this. This may be a 15-minute, that's a 5-minute, 1 hour, 4 hour. 4 hour, cool. Neat, right? I throw some other things on these charts too, and they're called, well, I like to identify the pivotal points in the market. What I call pivot points. Yeah. I've been using pivot points for so long that trade platforms didn't have them built in. There were no EAs or whatnot. You had to actually calculate them. That's how long I've been using them. Okay. So we'll get in that daily, weekly, and monthly pivot points. Here's an example. Okay. Weekly and monthly pivots are seen there. Wow, did FX Street just send me a text? How the heck did that happen? Thank you, FX Street. Watch, yeah, cool, neat. Interesting. All right. Let me get all that. Okay, so what are pivot points, by the way? Well, remember how I separated price from market using EMAs? And I separated price from market using oscillators? There are two types of support and resistance that I use. One will be like price action, and that will be identifying, right, tops and bottoms like that. using, you know, old bottoms or old tops, or you could I don't do trend lines that much, but you know, let's say you wanted a trend line on this sucker. That doesn't look good at all, but okay, whatever. But that's based on price, right? Guess I gotta do this one. That's all based on price. Support and resistance of price. It's the price, previous price, that was important to me and why I identify it now as support or resistance. Okay? Pivot points have to do with the open, high, low, and close of the previous period that you're measuring. Like yesterday, like last week, and like last month. That's a market. Based on market conditions, what are the pivotal points in the market today? Right? You see what I mean? Once again, a third different way of identifying market. Boy, I can't get that finger up. It's weird on this camera. Right? Separating price from market. It's important, is all I'm saying. And so we'll get into that. Okay. Multiple time frames are also important. Why? I wrote a book 8 years ago. One person per day still buys the book. Isn't that cool? I think it's really cool. Anyways, in the book, which I named Strategic and Tactical Forex Trading, I teach you how to separate long-term from short-term. Long-term being perfect for creating a strategy. Is you a bull or is you a bear? Pretty basic question, right? Well, how do you make a decision like that? Fundamental analysis, long-term charts. Like, let's say long-term, I'll say like a 4-hour or a daily chart. Should you be a bull or should you be a bear? See, if you were not here, if you were here, gives you a much different picture. This is a 1-minute chart, 5-minute chart. Okay? Wow, somebody's attacking my village. No! How dare you clash me in the middle of a webinar? Anyways, there's a difference between a 5-minute chart and a 4-hour chart or even a daily chart. Like, look at that. That's a lot of information, right? I got my pivots here and all that kind of stuff. There's all kinds of things going on, but these are long-term charts. Right? You'd probably even have a channel that way, right? I can't even see I can't even adjust it. Anyways, right? So, the long-term charts are used, there it is. The long-term charts are used to create a strategy. Are you bullish or bearish? You know what? A lot, if not most, amateur traders don't even know that basic question. They don't. They open their charts and they start looking for trades. And you know what? When you're looking for trades, you find them, right? You ever notice that? If you're looking for a trade, you've already lost. Maybe not this particular trade, but you're going to lose. You're going to lose money and you probably lose all the money in your trading account. What you should be doing as a professional is you do long-term technical analysis and fundamental analysis of currencies and pair up two currencies that are relative to each other. And for example, you pair up a currency that you're bullish on with a currency you're bearish on, both technically and fundamentally. And then once you have that strategy, you're like, like this. I'm bearish on euro dollar. Great. Fine. But that's your strategy. And you better be able to back that up. Well, I'm bearish because this is a head and shoulders pattern. I'm bearish because of the divergence in central banking policy. I'm bearish on this euro because the ECB recently told us that they're not going to raise interest rates for at least a couple of years while the Fed is on a smooth glide plane for continuing to raise interest rates. And this divergence in central banking policy makes me bullish, blah, 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 blah. This is coming down, right? But that's just a strategy. It doesn't put you in a trade. But what does it tell you? Well, I think we all know, right? I think we all know a trader should buy low and sell high. Bet you if you go back and look at your trading, there's oftentimes you break that rule. And you're like, oh my gosh, she's right. That's such a basic rule. That's like ABC stuff, right? This is like kindergarten. Buy low, sell high. You don't even have to, you don't have to know anything about technical or fundamental analysis. You just know that that's right. That's right. So if I'm bearish on euro dollar, I need to sell high. Well, what price? Aha! Technical analysis. Nice. Technical analysis helps you identify at what price it would be advantageous to sell. It doesn't necessarily tell you if you're a bull or a bear. But if you just open your charts and you're like, hey man, I'm looking for trade. Okay, that's going to be a double bottom, so I'm gonna do that. And then this is some resistance, and I'm going to do that. And then boom, I'm going to do a trade. Let's go. Let's trade. Well, you can do it. It's a lot of work, and you're going to be inconsistent. What I recommend is you start on this chart first, or start with fundamentals even better. Develop a strategy. What's your strategy? I'm bearish. Nice. Right? And then you drop into the smaller time frame using things like moving averages and price action and pivot points and all that kind of stuff. Right? And you look to sell high at one price or sell high at another price. If price action tells you the market's bullish, you simply don't trade in these market conditions because you're a bear. Why would you be selling in an uptrend? You wait for it to roll over, and it's going to roll over at obvious resistance. So it's your job now to use technical analysis to say, what price is resistance? Now you take control of your trading. You can't control the market, but you can control your behavior. You got me? Cool. You're like, thanks, Captain Obvious. Yeah, but you know what? It's amazing. Over the years, I've mentored a lot of people, and they might have traded for years even. And I start looking at their trading habits and their chart setup and their layout and stuff. I start looking at things, and it's the basic things that they're messing up on. They're really, really, really good at technical analysis, and they by and large suck at trading. Girl, you know it's true. Ooh, ooh, ooh. They're really good at technical analysis, but they're really bad at trading. So there must be more to it than that, right? I'll say, well, why did you sell that? The ADX told me. Why'd you do that? The MACD told me. What are you talking about? And the MACD told me. MACD told you? Right? I paid for a webinar. It's a London breakout strategy. Really? What happened to good old-fashioned do the work? Okay. All right. Let's go through this. I'm going to go, well, you know what? I'll save this a little bit later because there will be people that show up late. So anyways. Ryan says, good point. Of course it's a good point. Yeah. All right. Jay. Joseph's been watching some of your posts. Yeah, you have to know central banking policy, guys. You just have to. I don't know how you could, when people say, I want to be a professional Forex trader, but I don't want to do fundamental analysis. I don't get central bank policy. All central banks are liars and manipulators and scams. And I'm like, huh, yeah. All right, so let's, this isn't what I wanted. Why am I here? I want to see, oh, no. Pivots. There it is, that's fine. Okay. All right. Yeah, by the way, if anyone tries to teach you a trick, here's a quick and easy way to make a lot of money trading Forex, just turn it off, walk away, burn it, whatever. Here's my suggestion to be successful in Forex. Fall in love with doing the work. I literally was having dinner with a billionaire last month, right? And so I was in Hong Kong, so it must have been 2 months ago. Anyways, I was in Hong Kong, and I'm talking with this guy, and he's like, yeah, that sounds interesting. We should do business. I'm like, well, I only do business with people I know. He said, so when are you going to be in Dubai? And I'm like, I'm going to be in Dubai tomorrow. I'll leave tonight. Like, I'll come out and have dinner with you. I'm in Hong Kong. It's not that far from Dubai. So I jumped on a plane. Anyway, so he was telling me about this thing somebody pitched him. And it's like, I don't know, some fancy EA or something, but it's like, oh, no, it does all the fuzzy logic. It does all the things. And, right? So you don't have to do any of the work. It makes all the decisions. And you only have to pay like $1 bajillion for this. And it does everything for you. I'm like, some money manager pitched this to you? And he's like, yeah. So you don't have to do the work. I'm like, oh my gosh, I love doing the work. Why would you invest money with somebody that doesn't want to do the work? I love the work. It's where I get my pleasure from. I love downloading reports from central banking policies. I love reading stuff from the IMF. I love the BOE, the RBNZ, the RBA, the Fed, the Bank of Canada, People's Bank of China. I love doing this. I love looking at the other markets. I love looking at gold and oil and even wheat and the Baltic Dry Index. And I love all of this stuff. I love doing the work. Why would you give some guy money that is trying to find ways to not do the work. Like, it's stupid. He doesn't like the work. Get the hell out of the industry. So my advice to you is the same. Fall in love with the work. Get really good. Know things. Because if you're going to be a success in Forex, you're going to need to know things. You're going to have opinions. And if you trade other people's money, it's your job to be able to predict the future. You can't say, well, I'm going to do the London breakout strategy every day for you, eh? Hopefully it works. Why don't you learn technical analysis and fundamental analysis so you can understand how the market mechanics and the business cycles? You know what I mean? Like, why don't you learn to understand? And then people will come to you as someone who understands with questions. They might even pay you money for the answers because you've done the work, and they're like, that guy over there, he's smart. I've had, and this is a different billionaire, push through a crowd at a board meeting. We both sat on a board together, and he's pushing through people, and he's trying to get to me, and he's like, Wayne, you were right. You were right. I'm like, what do you mean you're right? He's like, I learned more about the foreign exchange market talking to you last board meeting than the senior vice president of Morgan Stanley could tell me in 3 hours with an entire staff. I'm like, I know things. I do the work. I get it. So anyways, 8:10. Let's get on. Get on with it. I'm sorry. Just love it. Don't cut corners, guys. If somebody tries to give you a trick, turn it away. You don't need a trick. Fall in love with doing the work. Right? Just think of it. It's like walking into a karate school. You got a Groupon for a free lesson. And you're like, yeah, how much do I have to pay to get a black belt? They're like, well, sir, you don't really pay for a black belt. You need to come in and earn it. And it will take you years of hard work. You're going to have to come in 3 times a week, an hour and a half at a time, and it's going to take you years. No. I need it quicker. I need it fast. Come on. Let's go. Give me my black belt. Come on. Can we speed the... No. I'll just pay you twice as much. Can I do it in 1 year? How about the person that just loves standing in front of a mirror and getting that thumb just right? Right? Their whole life. They're not trying to hurry up. They're enjoying the process, the plateau. They're enjoying it. And they practice and they practice and they perfect. And then they teach. Teach, right? Up, in, out, up, in, right? Then they're teaching the young kids. No, son. Get the thumb in and snap. Bring it back. It's a snap and then snap back. Like this. Oh, right? And you're becoming a master because you're not going fast, because you are putting the time in. But the thing is, how can you possibly become a master if you don't love the art that you practice? You understand? So don't skip things. Don't do the fast way. Don't do the tricks. Fall in love with the lifestyle. So I'll do things on the weekend, like I'll sit and I'll read Barron's magazine, and I'll read about the bond market and stuff like that. And I reward myself, or download central banking reports or something, right? That kind of stuff I often do on the weekend. You might say it's work. You're like, oh man, I got to download this IMF report. It's like 27 pages. I have to read this? No, I just want to skip it. So what I do is I'll download it, print it out, and I'll sit in the warm sun on a Saturday morning or a Sunday morning, right? The warm sun's on my face. I have a cup of coffee in my hand, I'll smoke a cigar, just kind of to enjoy the moment. And you know what? I pick up this report, even after doing this for 15 years. You know what? When I do stuff like that, I feel good. Do you know why? It reminds me that I'm a currency trader and I'm lucky to do this. It's like a privilege. I feel good. I'm like, I'm a real currency trader. Look at me. I'm reading an IMF report. I'm smoking a cigar. I have gray hair. I go to Harvard. I'm a Wall Street a-hole. Yeah, this is great. I'm the scumbag the 99% hate. I love it. Right? I do a good job, man. Right? I'm the 1% that everybody hates. I love it. So anyways, fall in love with what you do. So I'm a currency trader. How do I get my opinions? I spend weekends reading central bank report. I'm rich enough, bro. I'm rich enough. Although richer's cool too. I got stuff. I got toys. Oh yeah, wait, I have to have the watch, right? All right, I gotta have the watch. There's my Panerai. Now I'm rich. Now you have to respect me. I have a Panerai. All right, so anyways, got that out of the way. So let's get going. We have about 15 minutes left. I hope you take that as a rah-rah speech, right? Honestly. I don't think it's a bad message to say, you know, you should just love being a currency trader. It's actually a privilege. Okay? Yeah. No. So I noticed some comments in the no. You go to tradersway.com, open up a demo account or a live trading account. You can use this MT4 like I have here. But there's a button in the back office of your account, right? So you log into tradersway.com, log into your account, and it shows your how much money you have in your account and stuff like that, and you can pull your history. But there's also a button there that links you to my daily webinar for Traders Way clients. It's totally free. How many screens do I have? I don't know. Are you talking about behind me or in front of me? Like, for example, are you counting this one? I got screens all over. Yeah. So anyways, that's my message, guys. You can do this. It's a rewarding career. It's pretty awesome that you can do this anywhere in the world. I go on vacation or travel on business, and I take my business with me. No, I don't have an office anymore, Robert. I used to have a big office in a skyscraper and all that kind of stuff. Beautiful, beautiful view. But I have kids, so I'm at home all the time. I never leave. So I spend most of my time on the back deck smoking cigars and reading. Yeah. Mom! I'm in a webinar! Take the garbage out later, Mom! Just leave me alone! Jeez. All right. Let's go. Ready? This is the trade setup. The news is going to come out. This represents a 1-minute chart. Okay? Okay? 1-minute chart. News is going to come out. Boom, 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 boom. So like for the first 3 minutes, green, 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 green. Great. All this tells us is that volatility has hit the market because the news has been released. And we're going to deploy or employ. We're going to employ a high volatility event-driven strategy that's useful in all kinds of high volatility events. Yeah, meatloaf! The leftover meatloaf! I almost nunchucked you right there, Robert. You don't even know. Yeah. Oh, how many hours a day do I trade? I used to trade nonstop between 8 and 16 hours a day. But I spend most of my time doing longer term trades now. So, you know, my favorites, right? My favorites are like weekly and monthly swings. And then I'll throw in stuff around it, right? But my trading style has changed over the years as, you know, as other things have changed. But anyways, so let's go back to this. So this is only a scalp. Okay? This is only a scalp. Listen to me. This is only a scalp. I only do it in a high volatility, and an event means around like a news release. Excuse me. If it's a fundamental, because news isn't necessarily fundamental, don't mix these things up. But if it's a fundamental move, I would have to deploy a different strategy. And if it's just like regular trading that doesn't have the volatility, then once again, I have to trade differently. And would I trade like this on a long-term chart? No. So there are lots of different methodologies, right? For an event like non-farm payrolls or ISM or a GDP, retail sales, that kind of stuff, this is most often what I do, okay? So the volatility takes us in a direction. I don't care about your fundamental bias or long-term bias. This is just trading the volatility. So in this case, if it goes green, 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 the market has interpreted, not my opinion, the market has interpreted the news as being bullish for this currency pair. Okay? Great. So I'm a bull. That's it. That's all I'm doing here. In that scenario, I'm a bull, but I don't buy high. I don't buy green candles as a bull. I buy red candles as a bull because I need to buy low. You understand that? So I like to look for Fibonacci retracements, somewhere between the 382 and 618 Fibonacci retracements. In this example, it doesn't quite work out that way, but it dropped to the 786 and it held for a minute, held for another minute, held for a third minute, held for a fourth minute. Come on, bro. Are you going long or what? And that's what this is about. A high volatility scalp. There's no room for committee meetings and there's not enough time for group hugs. If you're going to do it, get ready to do it. So you need to make a decision early on in the game. With green candle, green candle, green candle, you have to say, all right, if this pulls back somewhere between the 382 and 618, I'm going to pull the trigger. Okay? Maybe not right on the button, but once you believe it's held, well, you know, 1 or 2 minutes in here, I mean, something in here has to make you go long, and then your stop is just below the lowest low. In this case, you're only risking about 15 pips. Okay? Well, by the time you pull the trigger, I'd say about 4 minutes later, you should be able to move your stop to break even if you want. When you get to this line in the sand, you need to be at break even. Because that's the resistance. Only one of two things are likely to happen with this volatility. One, you break resistance, you make the higher high, and you get paid. But think about it. If it collapsed and fell back down, where would it do it? Wow, look at this. FX Street's texting me. I got a third text now. Thank you, FX Street. Yeah. Look at that. Anyways. So, if it's going to collapse, Where would a bear sell? Well, that would be in here, right? That's why when you get there, that's why when you get here, move your stop to break even, and you either break even or you get paid. Hero or zero. That's a pretty good place to be in because you have the opportunity to win, but no risk. Okay? So when you're here, when you're challenging the line in the sand, move your stop to break even just in case it collapses. Boom! You got paid. Okay? That's basically it. We'll spend the rest of the time once the news comes out. We'll spend time looking at sort of the real meat because ultimately just doing this is interesting and fun, but it's not really a career. Okay? We can go over the the meat and potatoes of Forex trading for the next couple of hours. The stuff that you do all day, every day, I'm happy to cover with you as well. Okay? So thank you for being here. Thank you for asking questions and participating. Thank you for being at FX Street. Have we decided, is this Trade Non-Farm Payrolls month 140 or 139? But anyway, either way, it's an honor to have been doing this webinar with you guys for the last 12 years. Seeing that I'm only 28, I started this young. Okay? And of course, thank you for being a client of tradersway.com. 3 diamonds in the sky. Thank you for trading Forex at Traders Way. It's your way at Traders Way with Trader Wayne. Nice. 140. Okay. I have it up here. I have it up here as 139. So I guess I'll adjust that. Sounds better anyways, right? Okay, I've adjusted it on the scroll. 140, 140. Cool. Well, thank you guys. So once again, we'll go with euro dollar. Why not? On this chart, you can see things like daily pivot points, yesterday's high and low, Fibonacci levels, and that's about it. Okay. On these other charts, and you'll see here weekly pivot points. But why don't I put some monthlies on here too? So I'll just go pivot clusters. Okay. So we got weekly and monthly. So you can see above us there's some pretty significant resistance. But also I like to throw in price action. So this whole area here is pretty for schnazzle. So for example, I think this would be a sell zone if I was a bear. Okay? If it goes up, then I will consider selling there if I'm a bear. Okay? For example. And you can see down here would be a reasonable target, right?
This is a 24-hour live broadcast test channel from the Trade the News broadcast network. If you are hearing this message, you're
on the data on payrolls and unemployment for the U.S. October change in non-farm payrolls expected at 313,000, a big bounce back expected after the minus 33,000 in the September month. That was the first negative reading since October of 2010, but that was largely attributable to the hurricane impact. You could see revision to that back month data as well today. Again, non-farm payrolls headline for October expected at 313,000.
Yeah, because remember last month they had the mix-up.
Unemployment at 4.2%, which would be in line with the last month's reading, which was the lowest since May of 2001, pre-crisis. Average hourly earnings for October expected 0.2%, month-to-month 2.7% year-over-year. Weekly hours expected to remain at 34.4. Labor force participation expected to stay at 63.1%.
This is tradethenews.com, by the way.
It's got Canada data on October. Unemployment expected at 15,000, net change in jobs, and unemployment rate at 6.2% for Canada.
Okay, so remember, you should have your support and resistance identified so you know where bounces are. I've published everything on FX Street already as far as my methodology for trading this, both in the high volatility stuff that I went over, but also the counter trend trade. It's already been posted on fxstreet.com, in fact, years ago. Yeah, Craig, but it's not the key one, but yes. What do you think, 333?
October payrolls and unemployment data in just a few seconds.
333 maybe?
$261,000 for payrolls, 261,000 below the 313,000 expected, but back month revised up to plus 18,000 from minus 33,000, so about a 50,000 swing there in the back month. 4.1% unemployment, so dropping again below the 4.2% expected. Average hourly earnings at 0.0%, month over month is below 0.2% expected. Year over year, 2.4% versus 2.7% expected. Back month revised down 0.1 to 2.8%. Weekly hours remaining at 34.4. Participation rate at 62.7%, a 0.4 drop in participation. Canada changed employment at 35.3 thousand, above the 15,000 expected. Unemployment rate rising 0.1 to 6.3%. And non-farm payrolls at 261,000, well below 213,000 expected. The back month revised up about 50,000 to plus 18,000, wiping away the negative reading from last month on payrolls. Unemployment dropping yet again to 4.1%. A multi-year low in unemployment.
Burke, that the big adjustment of positive 216,000. So backed out, that would have still made the headline number still positive, but much smaller.
Overall, we're seeing some initial weakness in the greenback, with cable up a half of 55 pips. And the euro now trading up 26 pips, moving out to early session highs. U.S. bond yields, treasury yields have drifted a little bit lower, now below 233 in the 10-year following the jobs report. Again, the headline number was below consensus. We did see a back month revision higher as largely expected. The unemployment rate did drop again to 4.1%.
Cool. Very nice. So it's not a bad number. It's not as much as the market wanted, but who cares what the market wanted, right? So we'll see what happens here. Did it hit key levels of resistance? Well, it hit yesterday's high. That's an inside day. That's really weak, right? That's really weak. That's what we were scared about. Maybe you want to call it 117, but that's way up there. So that's pretty lame to not even break that, right? So you have to ask, are you going to try here at the central? We're at a 50%, right? And you're going to risk down into here. Well, I want to put this back to like a 15-minute chart. And you know, the upside, I would call it, well, that's 117.60 something. That's a big move. That's a pretty big move for today, but still, that's weekly R1, monthly M3. Okay. Okay. That's a big up for a down. But it's a valid sell zone, faux show. We just don't know if we're going to get there. So it depends on what you're doing here. So it has come down. It's made its 50% Fibonacci retracement, bouncing at a central. Remember, 2 minutes from now, you should be able to move your stop to break even. We're already actually challenging the line in the sand. It just wasn't a very big move. So when I first started this webinar 140 months ago, this event would have a 300 pip move up and a 300 pip move down. Or maybe, let's say 200 pip down or something like that. Okay, so let's move. Either you did or you didn't. We'll see. It's not a great response, right? But it's something. Let's go check out the rest of the market. You got a 50% fib, but 50% of hardly anything. Okay. All right. Check this out. I wish I had a drawing tool in this webinar. Anyways, right here, this is the last day of October, triple top, aha! Katie says, what moving average lines do I have? Aha! I went over that at the beginning. I'll come back to that later, Katie. Okay? So, on this day, the last day of the month, first day of the month cluster, I'm looking for one thing and one thing only, and that's for this to fall. There's no discussion of anything else. In fact, we talked about it, I don't know, every month, but certainly days in advance. We talked about this being a good pivot area. We talked about this also being good, but too early in the week. We wanted to wait until Wednesday, Thursday, which is here, right? And down, 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 down. Isn't that sweet? Check that out. I know, Katie, I know. It'll be all right. Is there anybody here that can concur? I mean, this is the kind of stuff I do with clients every single day at tradersway.com. Doing this. Now, I don't put you into a trade, but we discuss it for hours and days and days and days that, you know, the fundamentals and long-term technicals of what would create a move like this and why you might want to participate. It's always about the why, not the what. How to plan tomorrow's trades, next week's trades, next month's trades. I know what I'm going to do in January. So is anyone here, any Traders Way clients here that can confirm that we were all absolutely, totally, unequivocally ready for a downward move and not even discuss an upward move, not even a chance, not even a thought, not even a blink? Right? Cool. That's that. Compliments of the firm. Thank you for being a client to Traders Way. Hoorah! So 1, 2, 3, 4, 5, 6 clients so far. 7. Cool. Cool. But again, not the what so much as the why. That's what's important. All right, so let's take a look around the world here. This is a discussion of USD CAD. It had been going up and up and up and up and up and up and up. Funny thing is, remember how I was talking about I like longer term trades? So one of the things we talked about, I don't know, the first of the month. So when is that again? Wednesday? We identified this area is the only area on the entire chart in which price, if it would fall here at this price. At this price, in fact, this one, this line. If USD CAD would fall, and it's going up and up and up and up and up, then it would fall at that price. So it double top, then it made the lower low, then the lower high. And all of this I drew before it happened, by the way. So it looks like I've gone through and drawn it after. I drew it before. Okay. So like for example, you see here how I fib down, right? I'm assuming it falls, hits this line and retraces. Well, it didn't quite do that. But look at the prediction. It's very helpful to have a trade plan in advance. Yes, you're looking at a Trader's Way MT4 platform. Yes. Somebody named F wants to know the advantage of being a Trader's Way client. You get this guy every single day, 5 days a week, every London lunch. Fast execution speed, very competitive spreads, world-class customer service, and this hottie right here. Those are the 4 I can think of. Anyways, so the interesting thing about this setup now, what's the fundamental reason to look for a reversal of a pair that's skyrocketing? What is the fundamental reason? What would make me look for a reversal before it's even started to reverse? My bias in oil is bullish. When it was at $50 a barrel, I said it would fall, I guess here. I said it would fall back to 45 and then go from 45 to 55. Listen to me. Back in July, we had rallied up to 50. The new trade plan at that point was 50 was fair for oil at that point. That oil would fall back to 45 and then go from 45 to 55. Well, I was wrong. It only fell to 46 and then went to 55. I'm sorry. Only $4 down and $9 up. I must have been tired. I will do my best to improve. I am sorry. So here's the smaller move now. This is the move up to 53. Back 50% roll reversal. Look at all these up arrows. Well, it didn't go up here, but it did go up there. Those are called trade plans. That one failed, but this one worked. Happens. 50% roll reversal. So we're using Fibonacci and price action. And it hit. But look at this. We were talking back at the end of August. We were talking about up to 55. August. It's November and we hit the target. Cool, right? Look, down, up. Here's the other one. So we're rallied up, it came down, roll reversal, 50% fib, and that should take us where? Up to the 1382, which is also a pivot cluster. And I believe last month it was a pivot point. So I thought we'd get there in October. I'm sorry, it wasn't. We didn't get there until November 1st. You know, but the day earlier, that was also a monthly pivot. I'm pretty sure that that's a monthly pivot now, right? So anyways, we got to the 55. But what I'm getting to, okay, are there tutorials to teach you how to? I teach you every day. There's no tutorial per se. I love you and I will take care of you. We'll go through it every day. How about that? Okay. Yeah, so Robert's like, hey, like what I'm doing here, we've covered this inside and out. Like, right? People know it and get it, right? I'm not making this up on the fly. But my point here is our bias has clearly been up and only up for oil. So when you find yourself where the Canadian dollar is losing, you're like, hey, something's not right. This is supposed to be falling. If not against the dollar, then against something else. But like the Canadian dollar is supposed to benefit from higher oil prices. This is the fundamental analysis that says, hey, look for resistance, key levels of resistance in which price may reverse in favor of the Canadian dollar. And now the Canadian dollar is probably just getting steamrolled by the US dollar because it's the reserve currency of the world. Fine. So you can find something different. CAD yen, CAD Swissy, pound CAD, Euro CAD, or whatever. Okay? This is just a prime example of waiting. Okay? So, for example, this went up all last week, but oil went up last week. One of them is going to give. So on the first of the month, we get new monthly pivot points, and then we say, oh, Gagzeus. That happens to be not just a pivot point. That's not how you use pivot points. Like, oh, that's a pivot point? No, pivot points have meanings, right? A pivot point isn't a pivot point isn't a pivot point. Okay. Yeah, Pete, I'll answer that in a bit, right? Pivot points have meanings. And they change meaning depending on whether you're a bull or a bear. This is why people that don't have a bias don't get paid. Simple enough. Because how could you possibly be successful if you don't know what you're doing? And if you don't know what you're doing, you're not going to consistently do it. Without consistency, how could you possibly have any confidence? Because you have no control of what you're doing. You're a mess. You're a disaster. And probably a disgrace. So you can't be successful, right? You just can't. You don't know what to do. So, for example, if you woke up in the morning and you're like, oh, I wonder if the CAD's going to strengthen today because oil's been going up 3, 4, 5, 6, 7 days in a row. I'm waiting for the CAD to get strong because I'm a bull on Canadian dollar. Based on fundamental analysis of intra-markets. Cool, sounds nice, right? So you're like, so the Canadian dollar is supposed to get strong. So I wonder if monthly pivots will help. Well, here's the thing. On the first day of the month, you know you're going to get new pivots. So you know exactly when you're going to get new data. You already know that you're a bear on this pair because that means you're bullish on the Canadian dollar. If it's going down, the Canadian dollar is appreciating. You already know that that's what you want to do. You know the price because there's one key pivot point for this to that would attract a bear. There's one key pivot point that would attract a bear. The one that the bear would be praying for. Please give me this particular pivot point. I'm a bear. Please give it to me. You know what it is? Oh, there's a question from YouTube, I guess. Brian asks, how can I become a Trader's Way client? How about go to tradersway.com and open a demo account. It will take you 35 seconds for free. 35 seconds. Okay, that's all. Tradersway.com. So this particular line, this one particular pivot point, monthly pivot point, is this little red line here. That's it. The one. The one above it, there's another pivot up here. This one, much, much less desirable. How about the one, these ones? Much, much less desirable because those would be counter trend trades. I want a reversal, not a counter trend. And if it opened here, down here, not desirable. Down here, not desirable. Pass. So there's like one pivot that would get a bear excited, and it's at, I can't even see that. What is it? My glasses are so dark. 129.00000. There's one pivot. And you get a double top off of that. Well, that's almost predictable. Well, we actually talked about it here. Ha! Dun, 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 dun. So we did prepare for it days in advance. Isn't that neat? The only other opportunity to trade was if you were incredibly bullish. If you're incredibly bullish, this opened too high. It opened overbought according to pivot point theory, according to swing trading strategy theory. Okay? According to swing trading strategy theory, it opened overbought. But that's okay. If the whole world is buying, it's okay to buy overbought. That's what the moving averages are. You see how you're above the moving averages? You're above the 21. I told you, right? If you're bullish, you have to listen to my words, right? If you're already a bull and above the 21 EMA, you can be aggressive. I covered this before the news came out, right? So in that case, you would still buy at this 21. You'd still buy this 5A cross. Why would you do that? You're a bull! You were a bull the day before, the day before, the day before, the day... These are weeks, actually. The week before, the week before, the week before, the week before, the week before. You were a bull. You are bullish on U.S. dollar. You are bearish on Canadian dollar. Whatever. Or both. But you woke up in the morning knowing you were a bull. This is the huge differentiation from amateur traders and professionals. I can ask a professional, what's your outlook on the Canadian dollar? Oh, I'm bullish. I mean, we can have conversations and debates. We don't have to have a chart. Right? What are you going to do with the Canadian dollar tomorrow? I don't know. I'll have to wait till tomorrow and see. I'll open up my charts and I'll say something like, well, guess I'll buy today. I mean, what a silly thing. If you do that, you have to acknowledge, you're like, oh my God, that's so amateur. I have to stop doing that. You have to recognize that there's no professional that would do that. Like, I don't know if I'm going to be a bull tomorrow. I don't know if I'm bullish or bearish tomorrow. We'll see. We'll find out. What do you mean? Find out. Let's say I give you $1 million. Trade this. I'm not going to give it to you if you don't have an opinion. Like, well, I don't do any fundamental analysis. I don't like long-term charts. I'm all price action, baby. I wing it. Like, well, dude, if you wing it, I ain't giving you my money. Right? So anyways, the reason to be wary, see, the reason I was not a bull here, even though the 21 is above the 55, even though price is above the 21, I can be bullish and aggressive. The reason I wasn't a bull, the reason I was not a bull was fundamental analysis of intermarkets. I was a bull on oil. I've been a bull on oil since we hit 46 bucks a barrel. So since August. Well, actually, technically, down here is where I became bullish. And then I went to here and then came down and up. But I had been bullish on oil for months. So, looking at the Canadian dollar, I'm like, well, yeah, look, it's going up. Good. Don't want to buy it. I want to sell it. But I need bearish conditions. I need bearish prices. I need bearish pivots. And that set up this whole discussion of rolling it over. So we watched this reversal be born. What is it, doctor? Oh, it's a big, healthy reversal. Oh, we're so happy. Yeah, we're so happy. It's so beautiful. Okay. You're like, why is this guy yelling all the time? I don't know, eh? Stock market's going to open in a half an hour. Oh, pig. Here's the problem with pig. I have this set, well, first of all, to fall. Sorry. You see this? We had this set to fall on Wednesday. So, once again, with Traders Way clients, I did a webinar. Okay. On Monday, this is the buy. Isn't that interesting? On Monday, this is the buy. This is the buy zone. That's the buy zone for the weekly strategy, the weekly swing trade strategy. You understand? This is what we talked on Monday. You know what the target was? This red zone. That's what we did on Monday. High five, by the way. High five. Okay. Then on Wednesday, we're like, oh, damn, we hit our target. Shoot, we made our money too quickly. Well, think of that. What do people tend to do if they make quick money? They get out. Give me my money while I can. Hey, Albert. Alberta. How's life, oh, my old friend? Well, life is great. Life is grand. Life is good. Life is beautiful. All right, so people tend to take their money and run when they make it too quickly. They're afraid it's going to go away. So this is a counter trend. So we talked about what a counter trend would look like. So we were having a conversation, right? One of the clients said, well, should I just sell here? I'm like, well, I wouldn't really just sell here. What I think you should do is get confirmation that the market, people have gotten out, right? The bullish market is dead. So if I were me, I would like to make a lower low, lower than this low, And then, based on that, I would draw a Fibonacci study, look for a 382 to 618 Fibonacci retracement somewhere around this roll reversal, and then short. And it did it! Oh, well, look, it did it the next day. You only had 12 hours to prepare. I'm sorry. I'm sorry. See, I don't put you into a trade. We discuss why and how. So we were still here. I'm like, no. You want to look at price action. You'd want the lower low because lower lows don't exist in uptrends. That would confirm that bulls have gotten out of the bullish move at the exact price they're supposed to. So if they're getting out, their brokers are, because they're long, are entering sell positions to offset their long positions, which brings the market down, which then invites the lower high scenario. You might want to call it a head and shoulders. It's the same thing. But in that case, you want to look for roll reversals in fib zones that would predict a downward move. So that's what we did on Wednesday. But on Monday, we had it going up. Well, how would you know that? Well, we were at support. And this is the swing buy zone. So this is something we do every Monday. Then on Wednesday, you're like, well, we've hit our target, right? It went from 131 to 133. It's only 200 pips. And then, because of where we were, okay, and it's very range bound, you can see all the way back here, and you can see I've already highlighted all this area and stuff. Well, based on that, it will probably head down. Now, I'll tell you what. I said this is the conservative target because of the pivot cluster. And the assumption when you're doing a counter trend trade is back to the central pivot. Further, like through the central pivot, that I don't know. But the aggressive target is actually this area. The bottom, right? The bottom of the range. So I didn't know it was going to go way down here. I didn't. Only here or here. This brings us to our current setup. Oh, Brian, we met in South Africa? Cool, man. I was just telling Ryan, I miss South Africa. I like me in South Africa. The question, when do I do my daily webinars? 7:30 in the morning, Monday through Friday. Except the first Friday of the month, I'm here at FX Street. So, you guys ready to predict the future? I think I may consider this a breakout. Now, there's a caveat to this. I have to go out to a higher time frame. You see this? I've already got it going down to 128, bro. What? Yeah, I'm due for Cape Town, right? I got to do a Cape Town visit. But I didn't get to see Kruger. You got to be in Joburg to go, right? To go see the big three. Yes, New York time, center of the universe. Yeah, so the time will change, but anyways. So anyways, I already got it down here. So you can see my bias now. You're like in the range, selling at the top. It's not an unthought of strategy, since this goes back now to the beginning of October. We already had it at a 50% retracement of the big down move. So we already have it coming down. So my problem, and I'll draw it with this blue just to have it stand out a little bit more, even though it's not really the right tool. Now I'm not going to be able to drag that down. No, anyways. It's this lower blue line that bothers me. Try to get this level. Looks pretty close. Okay, you see that bottom and where we are now could be an issue, couldn't it? Looks like it was. I don't think I'm the only person. Thank you, Albert. Oh, we'll get there. We'll go over Euro Swissy. Okay? So do you see my conundrum now? There's kind of two scenarios. It goes all the way back to 133, right? Or we're going to break this. So I have to decide, am I going to treat this as a lower low? That low being lower than that, right? Oops. And that being there, right? You see what I mean? So maybe if I'm going to trade it like that, then I'm hoping for a lower high. I wouldn't use a fib here because it's not quite trending yet on this time frame. Okay? And Fibonacci is a trending tool. So I can't really use that. Oops, I killed that. Let's see. Okay, there we go. I can't use that. But this price action now, I'm talking about this area that I drew weeks ago, or days ago, I should say. Well, probably, maybe last week, or the week before. There we go. I can use this price action as resistance to sell, and I could use this as resistance to sell. So now I got my prices, these two X's, okay, which were old targets anyways. You see the beauty of that? I already had them as support, but we're through them, so they're no longer support, they're resistance. So now I got to plan this out. What kind of price action or reversal pattern would I want to see to make me want to sell? I know the price. I want to sell near 131.50 or 131. What do I want to see? 5A cross down, 21.55 cross down, oscillator rollover, double top, lower low, 1, 2, 3. But do you understand? We're preparing now. I know my price. I don't know if I'm going to sell. I know I'm not going to buy, because if I was going to buy, I should have already bought it. Okay? I should have bought it down here. So I'm not in a place to buy it. So if I've decided to be a bear, I know I want to sell at 131 or 131.50-ish. Then to confirm, I need to see some sort of reversal, some sort of pattern, some sort of trigger. So I'm expecting that now or a little higher. And if I get that, I take the shot and I manage the risk. Certainly much better than winging it, right? Hope you guys are having fun. There's only an hour and a half left. I need my energy. But what if it is lower low? Not sure if I follow. It's probably delayed. Katie says, well, that monthly on pound dollar is bullish. Well, there's no doubt about that. Okay. Okay. So that's what I'm saying. If you're already a bull, you would have bought it. So I don't need to discuss that anymore. What's more important is what's going to happen in the near future. If you're a bear, you're setting it up here or you're setting it up there, and now you wait. Of course, amateurs don't wait, right? It's like a video game to them. Do, 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 do. I gotta get in trade, I gotta get in trade, I'm missing it, I'm missing it, I'm missing it, I gotta get in trade, I'm missing it. Okay. So we've had some US dollar weakness this week. And we talked about that last week based on gold double bottom. That if the gold double bottom holds, and we can get rid of this fib because it didn't fib, okay? If the double bottom holds on gold, then next week, which is actually this week, the US dollar would likely be weak. Okay, I got to answer Pete's question here because he's asked a couple of times. Okay, where does the consensus come from? Well, usually like a guy in a $1,000 suit with purple cufflinks that matches Porsche, his purple Porsche and his purple cufflinks, walks down to the windowless office of the quants. And he says, hey, nerd! Give me the NFP numbers, huh? I'll be back after lunch, taking a client out. So the quant sits down and starts plugging data into his model or her model. How do you do that? Well, I wrote a multi-page article at FX Street specifically on how to build models. And then FX Street has expanded on that in a beautiful way to help you build your model. Okay? And so this number, this expert, like the market consensus is 313. How do you come up with that? Well, they sample a bunch of traders at banks, for example, and say, what's your number? And they average it out. So it comes out to like about 313. That gets published. That's all it is. Is there a link to the document? Yeah, well, it's at FX Street, I can tell you that much. Okay. So anyways, you guys see like the thought process here? So last Friday, I'm working with Traders Way clients in our daily webinar, and I'm like, hey, did you notice this price on gold? It's a previous low. Okay? It might bounce here. And you can see it was a pivot and everything. It might bounce here. And if it does, US dollar would be, or should be, or could be, weak. Right? For as long as it holds. Right? So on what time frame? Okay. Here's when we talked about it. This is when gold was bottoming out. Pete brings up a question. He says he's read I've read that model, but ADP and claims this week didn't match. Okay, right. Over the course of 50 years, okay, over the course of 50 years, ADP has not had a positive nor negative correlation to NFP. Now, the last 7 or 8 years, it's had a super high positive correlation, but that's because the market has been manipulated by the central bank, and the central bank was manipulating the market specifically to create inflation and create jobs, because at the Fed, the Federal Reserve Bank of the United States, has a dual mandate. Yes, I believe Traders Way uses CTrader as well, if you need it. I believe that is true. But I use MT4, so. But, I don't know, go to Traders Way. They'll tell you. Oh, wow, now I'm lost. What were we talking about? The ADP. Now, the central bank in the United States has been manipulating the market to create inflation and create jobs. So, therefore, ADP and NFP were highly correlated, but that wasn't a free market. That was a manipulated market. So, as we've moved away from market manipulation back to normalization, I believe, because I don't know the future, but I believe the correlation will break down and not be positive or negative, and it'll just be not helpful. But there was a time before this financial crisis, used to hear people on TV all the time. They would say, oh, well, because of ADP was so good, so I'm going to go, I'm super aggressive on non-farm payrolls. So, 10 years ago, I had a quant working for me, right? Math degree in applied statistics. Kurt Worley, tall, good-looking, smart, intelligent, kind-hearted man. I said, hey, Kurt, you're a quant. Do some research. Is that true? That idiot said on TV, the idiot said because of ADP, he's going to do something on NFP. Is that true? Does that actually make sense? So he analyzed 50 years of ADP history, or whatever it was. I don't think it was 50 years. He did 50 years of oil market industry. But anyways, so he went back whatever amount of time. I can't remember. A long time. And downloaded all the data sets for non-farm payrolls as well, and found no positive and no negative correlation whatsoever. There's no relationship between ADP and NFP in a normal market. And we haven't been in a normal market for almost 10 years now. But I'm wicked smart. And so I'd like to thank Kurt Worley for doing that work for us. 1, 2, you rock. Thank you, Kurt. Oh. Yeah. If you believe, yeah, if you believe, if you have permission to be bear here. Audit Young says, hey, can you analyze this? Sure. The target is 114. So you still have 250 pips left. Cool. Anything else? Remember, that's not my opinion. See, that's why I can lean forward and tell you. It's like playing the piano. I'm not interpreting the Mozart for you. There are dots on a piece of paper, and if I play it exactly the way it's written, you hear Mozart. Right? So I'm a concert pianist, a journeyman piano player. Give me sheet music, I'll play it. Jazz, as long as it's written down. Right? You want me to play Adele songs on the piano? Hello? It's me. I need to write a song, it's in my contract, but I have nothing to write about except writer's block. Don't know what's gonna come next, so I think I'll take a walk. So, give me the sheet music and boom. So you're like, what? How far is this going to fall? It's going to fall to 113.94 and a half. That's the aggressive target. The conservative one is 114.57.2. So that's that. Not an opinion. I don't have an opinion. You have the opinion. If you're a bear, you see that as a head and shoulders pattern and you're trading it, sweet. There's all kinds of things you can do. For example, if you consider that the neckline, then, right, then that's the target, and you probably should have traded it from the break line, but, you know, hang on, let me do this again. I gotta get in there. I gotta draw this right. Come on. Okay, neckline, neckline. Okay. Let's get in there now. Top to bottom. Okay. Put it to the neckline and breakout. So, if you're trading using technical analysis and you're using patterns, you say, well, that's a head and shoulders. That's the neckline. That's the crown. That's the target. Okay? And based on that, you're like, well, it's pretty close to S2. So, yeah, we're going to head down to 114. But I already said that. You see what I mean? So if you're trading the pattern, you're trading the pattern. It's not your opinion. Are you trading the pattern? Do you see that as a pattern? Is that a pattern? Is that a head and shoulders? That's your opinion. Is that a head and shoulders? Yes, it's a head and shoulders. Then there's the target. Not an opinion. If you don't like that pattern, don't trade it. Got it? So again, not an opinion. If you're going to trade the pattern, then the pattern tells you where the target is. That's that. That's why it's important to have a bias fundamentally, because that's where your strategy comes from. If you don't have a bias, you don't have a strategy. You don't have a strategy, you're not consistent. You're not consistent. You're out of control. You're out of control. Trading's a mess, and you're going to lose all your money. It's good for me, though. I love lazy people that don't do the work. I love them. They're awesome, right? It's like a line of 100 people standing outside my front door every morning. I wake up, put on my robe and my slippers, and I walk down to the front door, and I open it up, and there's a guy standing there with a bag of money, and he's like, "Hi, my name's Jimmy. I'm lazy. I used to trade options. I sucked at that. Tried some MLM for a while, sucked at that. Did some Amway, I sucked at that. Then my buddy told me he could get a good deal on Iraqi dinar, so we bought that, and that sucked. But it got me into Forex, doing a London breakout strategy, but that sucked. So, now I'm just winging it. I'm winging it, bro. I don't know what I'm doing. I have no plan. I have no strategy. And, oh, here's some money." And I'm like, "Thank you. Thank you. I appreciate you sucking so much, because you're a liquidity event for me. When I'm taking profit, you're jumping in. Great. Thanks for the money, bro. Next." The next guy comes up. "Hi, my name's Karen. I have no trade plan. I don't know what I'm doing. I'm going to sell at support. Here's my money." I'm like, because, right, don't you ever laugh like, who the hell sold that at support? It's amazing, right? Who's buying it at resistance? No, so one of the things is when I show you how to trade pivot points, right? I'll say, "Do you remember when you used to buy at prices like this?" And everyone has that look of shame, like, "Oh, Wayne, don't remind me. Oh, I would have bought that back in the day." Right? It's all comfortable. People are getting all squirmy. "Oh, yeah." And I'll say, "Remember when you used to buy at R2? Remember that? Hey, look, we're at M4. Now I should buy it." I mean, it's hard to look at, but people do it. Right? People do it because they don't know, or a lot of times they don't even check. They're just boom, they're into a trade, right? Yeah, all this would be intraday. You just have to put it into your own trade plan. Okay, I can't do 24-hour webinars. I've tried it, by the way, and what happens is people turn their brains off, and they're like, "Wayne, just tell me what to do. Wayne, just tell me what to do. I don't want to think. I don't want to plan. I don't want to learn this. I'm just going to sit and wait for you to tell me to buy or sell, and I'll do it." So if I'm going to make all the decisions, you should pay me a lot of money. Guy offered me $1 million the other day. I turned him down. I'm like, "Sorry, that's not enough." I'm a college student. Carlos. I don't. Yeah, well, it's certainly never easy, right? He's like, "I know several hedge fund traders who are not lazy and do not make money." Yeah. Yes. Yes, trading is difficult. I am not trying to tell you it's easy. What I'm telling you is, don't look for the easy way. Right, Carlos? Fall in love with your work. Because when you go through tough times, right, you need to double down almost, right? Like you should, I mean, at the very least, you should enjoy what you do so that you can get good at it. But there are always times when you're going to stare into the abyss, right? But boy, oh boy, I'll tell you, when it comes to amateur traders though, Carlos, most of the time, the failure of amateur traders is not technical analysis. Okay? But when you get to now hedge fund level, now any idiot can start a hedge fund, but let's say that your friends are not idiots, right? These are smart people. Then yeah, game on, right? Now it's serious stuff. And everyone has their own alpha. And beta this year has been tough. Not all throughout the year, but it's been a challenging beta October. Right? But also you'll find when you start a hedge fund, the trading part is the easy part. The regulatory side is a nightmare. Working with clients is a nightmare. Finding clients is a nightmare. Getting clients to give you money is a nightmare. I mean, all of these things are a skill in of themselves. And the vast majority of traders that say, hey, I'm a really good trader, I'm going to start a hedge fund, they don't even know what they're getting themselves into. Okay. So let's go back. Question here. So should but gold? I think you're saying, should I buy gold? Well, if you were bullish on gold, you had a buying opportunity on Friday. There's also clearly obvious in your face a bullish swing on Tuesday. You should look at this and know that there's a long there. Like unequivocally. Wow, I got to say that twice today. You should see it. If you don't see it, you're missing something. I'm looking at it like, oh my God. You're joking, right? There's a double bottom, and then look on Tuesday, the buy. If you don't see that, then you honestly don't know. You don't know how to trade. I'm looking at it like, but the thing is, you have to already be a bull on gold. I keep driving this home, but people fight me on it. You need to already be a bull. Or you already need to be a bear. Now, on Tuesday morning or Monday night, there's a bearish sell in here. You wouldn't have made money. It fell for half a day, so you probably did make money. But it was a disappointing week for you as a bear. But you still probably made money. Okay? But as a bull, there's clearly a buy there after the double bottom, so there's actually two trades there. All you had to do is be a bull. Now, here's the thing. This is how it all works, guys. It's your job to be opinionated. It's your job to do the analysis, fundamentally, technically, macro, micro, the whole thing. It's your job to make decisions. People pay you money because you are wicked smart. Right? So here's the thing. When the rest of the market agrees with you, you get paid. When your alpha matches the beta per se. Okay? When the market disagrees with you, doesn't go along with your direction, you're a bear, but the market went bullish, well, then you didn't get paid this week. You either didn't get a trade, or you got busted out break even, or you had small losses. But you can't possibly have big losses. You're a professional. Professionals don't have big losses. Okay? Professionals with big losses are buried halfway between Dubai and Abu Dhabi. Cornfields, baby. You're in the cornfields of Iowa if you've lost, right? So anyways, When the market happens, when the market conditions are favorable to your bias, you make money. When market conditions are not favorable for your bias, you don't make money. But you're not switching gears every day, every hour, every minute. Oh, what am I going to do? I guess I'm going to buy that. I guess I'm going to sell that. You already know before you even get out of bed. In fact, you've been dreaming about it. Right? You understand? You got it? So, if you're a bull, that is so ridiculously easy. Now, I'm not saying trading is easy, but I'm saying if you have a bias and you're sitting here like, I'm a bull, I think it'll double bottom, or at least I think it could double bottom, so I'm going to get ready. Oh, look, it did double bottom. So now what do you do after a double bottom? What do you use in technical analysis to trade after a confirmed double bottom? A 1, 2, 3. High, high, low, long and gone. Now, did you make a ton of money? No, you didn't make a ton of money yet. Maybe next week it'll go up further. It's an M2. Do you know what my target is? 113.11. Oh, snap, you say. Yeah, oh, snap. This predicts this. It's technical analysis. But that's not how you get paid. Paid, the valuable stuff now, is as it was falling, you say, well, I see gold falling, but I'm still bullish. A bull would have bought here. Was it good analysis? Yes. Did it go up? Yes. Did I predict it go up? Yes. Did it go up? Yes. %. Roll reversal. Very predictable stuff. If you are a bull, you would buy that, and I have it drawn out twice that it should go up. Did it go up? Yeah, for a while. Only for a day. Then it collapsed, and then we're out. That's what a failed trade plan looks like. Do you think that would be a significant loss? Do you think this is where you lose 10% of your trading account because this didn't go up like you thought? No, you had a trade plan. It's a beautiful trade plan. 50% on a roll reversal after a higher high? That's hot. That's sexy. And then it failed. So you probably broke even. Maybe you lost a little bit of money, but you couldn't have lost a lot of money. So you're like, well, that sucks. As a bull, I find that very disappointing. And then the new week comes out, and this is the projected bottom for the week. Let me get rid of this. It's this one I'm trying to move. There we go. See? Last week's projected bottom is the exact bottom for last week. We knew that on Monday. We knew that on Tuesday. We knew that on Wednesday. We knew that on Thursday. And on Friday, we hit it. And not 1 penny lower. So is it even possible? If you were a bull and you saw that, is it even possible to have a bullish trade plan? And the answer is yes. And using pivot points and swing trading theory, that is the one pivot to buy at. So, like, why wouldn't you have bought it? Of course you would have bought it. Would you have made a lot of money? No. No. But you're richer than you were on Tuesday. And what if this fulfills its destiny? Double bottom, monthly M2, prediction of monthly M4. Well, then you bought it at 265, and you're taking it to, right? It's nice, right? It's plausible. We don't know if it's going to happen, but boy, is that plausible. And that's called trade planning. But here's the thing. This is what we talked about last Friday. If that happened, wouldn't that make the US dollar weak? What is the opposite of gold? The US dollar. Well, that could be a weak dollar. Yeah. Okay. And that sets this up. Right? Am I too preachy today? I feel like I'm too preachy. It's sometimes just a tone of voice or something, right? So I apologize if I come across that way. From Arturo, Wayne, always a pleasure to learn a few questions. Statistically, what are the I don't know anything about S3R3. Okay, so I don't know. I just don't know. Anytime, Pete. Take care. Everybody's okay? Jim's, yeah, the market can be ruthless if you don't pay attention. Sure. But I'm trying to put things together, like string it. I'm trying to share like a thought process. You know what I mean? To me, that's more important, like the thought process. How do you get to a trade? How do you get to a trade plan? I don't care whether you buy or sell something, because I don't know if I'm right. You have just as good chance of being right. Right? I'm more interested in the why. And as I think are you. So, what would you like to do for the next hour? La, 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 la. I was up late last night doing homework. Guess what? Grad school at Harvard is not easy. Yeah. Constant. What do you guys want to do the next hour, huh? Oh, the beast, sure. Let's take a look at the Widowmaker. La 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 la. Okay. Anything in particular? La 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 la. Do, 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 do. Just kind of eyeballing it. Vials, I'm hoping could go to what, $1.60? Yeah, long at 149, nice psych level, sweet. Yeah, you got some work because obviously that's sort of like a betcha type trade, right? Which after NFP ain't a bad thing. It just comes down to, do you believe that that pattern still has legs, right? Carlos says 20 million. That's a better level. See, when you're doing currency trading, you need the 10 or 20 million as sort of a base. So that's better. But if that means we're partners and we charge 20%, what does that mean? Well, let's say we double the money. So we make 20 million. That's only $4 million bucks. We got to divide that in half. 2 million? And then you say, well, doubling an account is pretty difficult, especially if you're risk averse. Let's say 50% return. That's only $1 million. You see what I mean? So like you kind of have to have a bare minimum of 20 million. Right? All right, so Daniel asked a good question. How do you prepare for the week? And yeah, so I'm constantly reading, right? I'm constantly analyzing fundamentals. But it's not hard because you're interested in it, right? And I'll tell you the key to my success. Every so often, a client at Trader's Way sends me a cigar. So it's my way of rewarding myself. So maybe after this event, I will smoke this. And I reward myself, and I'll sit down and I'll look at charts, or I'll do my reading and all that kind of stuff. But because I'm constantly doing that, so look at a gift. Thank you. Donut, right? Best clients in the world. Thank you. How many clients at FXCM send their support staff gifts? Anyways, so I reward myself and I sit and I ponder and I think. And it's constant. It's not like I have to do it. I always do it. I meditate every single day. I'm not joking. For as long as I can remember. Yeah, as long as I can remember. Well, no, I don't remember when it started. So, but let's say as long as I've been a currency trader, for sure. Okay. So I'm always thinking. I'm always analyze. I never listen to anybody else. I have TV going on behind me. Or at least I did. Bloomberg died on me. Well, they make me register now to watch TV? What? Anyways, so I do the analysis and I frame my own opinions, and it's a constant thing, and I enjoy it, and I reward myself. You know, this is Jamaican Blue Mountain coffee. So I got my $100 a pound coffee. Got my beautiful cigar. Look at that. Ginormous, right? And I reward myself and I keep myself in love with what I do. And this helps in many ways. Now, framing my opinion, like how do I prepare for the week ahead? I teach myself to like what I do. And it's self-perpetual. It's sort of like going to the gym. I don't go to the gym, as you can tell. No, this is not a Cohiba. It's nice, though. I mean, look at the size of it. I mean, it's big, right? Right, but people that go to the gym, they start working out, and all of a sudden they're getting endorphins, and their muscles start getting bigger, and their fat starts going away, and all of a sudden they're like, I'm like, dude, are you staring at yourself in the mirror as you're working out? No, right? But you get to enjoy it, and you get, I don't know, whatever it is, it's an addiction, I guess. I don't know. Right? But to me, that's the most important thing. Psychologically, being a trader, like I said earlier, reminding yourself how lucky you are to have the opportunity. You're like, I've been doing this a long time. I'm like, I'm a real currency trader. It's funny that I still think that, right? Like this, look at me, I'm like an adult. You ever feel that way? Driving down the road, you're like, oh my God, I'm 45? I'm like an adult. I got like responsibilities. I have to clean the house because I'm an adult. Right? It's kind of funny, isn't it? Or is it just me? I guess it's just me. Yeah. So that's sort of the psychologically there. Now, technical, like I said, is easy. Give me a chart, I'll tell you what it says. Not a problem. But my bias is important. And that is a constant development. So when I look at a chart, it either, I look at it to see if I agree with it or not. Like, oh, it's bullish, but I'm a bear, so not today. Next, right? And you can go through these quickly, I guess. Right? So just sort of that mindset of just, it's always work. I always have my charts on. I'm always watching my phone because I got MT4 on my phone constantly. Just you know, I love it. Now let's talk about the Carlos's point, which is really good. 5% a month. That's a beautiful number, Carlito. That's a beautiful number. That's the right number. I would refine that, however. I would refine it. Oh, this smells so good. Oh, shh, don't tell my wife. By the way, I'm almost out of cigars. If anyone wants to send me a gift. jrcigars.com. All right. Oh yeah, I'm gonna light this. So what were we talking about? Oh, I would refine that, and I would say really 2.5 to 5. So 2% to 5%. Now, why would I say that? Oh, I didn't even light it. Oh, this has a cutter. That's right. Why would I say that? Look, it's so big. I don't even have cutters big enough. I got a super big one here. Oh. It's too big. Wow. Woo! That was difficult. And that's for big cigars. So, the reason is the return is influenced or a function of risk, but also your beta. Okay, so your alpha is your ability to beat the market, okay? How do you beat the market, guys? How do you beat the market? Well, you are righter, meaning your bias was better than everybody else. You were a bull when not everyone was a bull. Some people were bears, some people were neutral. You were, okay? The other way is to be too aggressive. How do you be too aggressive? Generally what it means is, this is a giant cigar, by the way. Generally what it means is your lot size is way, way too big. You beat the market by taking risk. Now, risk is bad. Okay? You understand? Risk is bad. So you can't beat the market by taking undue risk. You will be, your risk-adjusted returns will knock you down, and an investor like Carlito would laugh at you. Okay? So, you got to keep your risk under control. Which means now, what dictates whether you have a big month or a bad month, or a big month or a modest month? That's the beta, guys, the beta. What is the market doing? How does a trader, this is when I'm analyzing traders, and I'm looking at the trade history, I'll know what the market does. I know the market. So let's say I look at a trade history for someone's trades in August. And I'll say, let's say the market moved 2% in the month of August. And the trader I'm analyzing made 10% that month. Do you understand that some guy made 10% when the market didn't move? So how did he do it? There's only one way. The way we discussed, the wrong way. He overtraded. And that's a dead giveaway, right? Right? Dead giveaway. So the beta is 2%. Oops. The beta is 2%. Right? Beta is 2%, and the return is way too high. So now you know that the reward was a function of risk, and you don't want risk. So this is why I say like the 2% to 5%. You need to keep your lot size relative to your account size low. Okay? For example, I used to have like an unwritten rule. For every 100,000 in cash, I would trade one mini lot. Ha! I bet you I was taking less risk per trade than you. How many people are trading mini lots but have less than 100,000 in cash in their account? How many? Raise your hand. Like, dude, there's so many hands in the air, I can't see the lights anymore. Then you're going to say, Wayne, you can't make any real money. If you're only trading mini lots and you have 100,000 in cash, how could you possibly make any real return? Well, bro, I let my winners run. Bro, I got 100 trades open. Bro, I make 10,000 pips a month. What do you do? I make 2 trades a day. I trade 5 mini lots. I have $5,000 in the account. So you have 3 bad trades and you've lost, what, 3% of your trading account? And you're like, I had a bad day. Bad day? That's a bad month. What's a peasant to do? Beg, borrow, steal money. Friends, family, and fools. Increase your assets under management. Increase your account size. Lower your lot size. Lower your risk. Get a second job. I mentored a guy once, and he's like, I'm starting to get it, and I want to make money. I want to take advantage of my success, Wayne. I want to make money. I'm like, whoa. You're undercapitalized. He's like, well, how do I get money? I'm like, well, first of all, you don't have a track record, so no one's going to give you money. So you got to take a second job. And you got to go through your house and sell things. Go through your garage. Go through your basement. Go through everything in your house. And he's going, well, I have 3 cars. I'm like, sell one of your cars. Maybe sell 2 of your cars. Get a bicycle. Sell your car. So you know what this guy did? He went through his house. He went through his garage. He went through his basement. He sold like half the assets he owned. He sold his car. He sold his truck. He sold his dog. True story. That's what it takes. All in dedication. Yeah. That's what it takes. I'm not joking. That's what it takes. Yeah, Poor Dog, Rich Dog, right? There's a good book, right? Yeah, damn good dog. But that's 60.1. Woo, that's a good, huh? 60's great. Thank you, bro. All in dedication, right? That's what it takes. How do you prepare for the week? Sell your dog, right? Increase your assets under management. Lower your risk relative to your account size. And you want one more piece of advice on making money? I did this. So when I first started trading, I quit my job. I was vice president of the firm. a venture capitalist, doing everything I love. So I quit and became a Forex trader because it's even better money. And then I ran into a tough time because I hadn't really traded all day, every day by myself. And I ran into a lonely period and a period of losses. And I realized the isolation of the job was a risk I hadn't calculated for, right? So anyway, so I went on a business planning retreat with myself. And I did a lot of interesting things over the course of that couple of days at the Ritz-Carlton, Half Moon Bay, California. Beautiful, second home. Anyways, one of the things I did is I built a pro forma cash flow statement with 3 years day-by-day projections for my trading business. Yeah, I'm an overachiever. And one of the things I discovered in my model as I was building models and stuff, the less I paid myself, the more money I made. Think of that. This is a giant cigar. The less I paid myself, the more money I made. What do I mean by that? How much do you pay yourself every month? I worked on a formula for this. And I discovered that the less I paid myself every month, the more money I made at the end of the year. How about that? Why? My account size would grow faster. Therefore, my lot size would grow faster relative to the account size. In fact, I grew my lot size slower than the account grew. So let's say, I'll tell you, I'll make up a number, but you'll get the idea. Let's say my account size grew by 10%. My lot size might only grow by 5%. You see what I mean? And then the next one goes up, let's say the next month, another 10%. And so at the end of the year, my lot sizes are actually significantly less relative to the account size. So I'm actually taking less risk per trade, but the lot size has probably tripled over the course of the year. You see what I mean? So my AUM grew and grew and grew. My risk got smaller and smaller and smaller. Oh, snap. Daniel says, how long did it take before? Well, I traded a demo for 2 years. But, you know, all that kind of stuff. But anyways, so you can do all kinds of things like, then you start messing with it because you're like, oh my God, the less I pay myself, the more I'll make at the end of the year. So then you say, well, what if I don't pay myself at all the first year? What if I just take a second job? What if I go back to being like an exotic dancer? Get home by the London Open, right? Just dance to about 2 in the morning, then rush home and get the 3 a.m. London Open. Doing my London breakout strategy in my my yellow thong, right? Yeah, whatever. Do what it takes because you'll make more money because your assets under management increase. And then you're that type of person after 2 or 3 years of such hard work and dedication and growing your account size and lowering your lot size. So imagine now your volatility gets less and less and less. Portfolio volatility. The volatility of your trading history will get smaller and smaller because you're actually taking less and less risk. Now your lot size is growing, but your account size is growing more. So statistically, the volatility of your gets smaller. So you're like 3-4 years from now of doing this, you'll run into a rich dude or a rich lady. And she's like, hey. You're like, hey. What do you do? Oh, I'm in foreign currency arbitrage. I'm an arbitrager. And she's like, hey, right? So anyways, she's like, let's see your trading history, son. And you hand it over, and it says +3, +2, +3, +2, +4, +1, +3, -1, +1. And they're like, damn, this guy's like a machine. Yes, low volatility, constant returns, very little risk, solid, consistent, year-round growth. Money will rain out of the sky for you. But the thing is, I'll look at the beta, and I'm looking for risk and your ability to manage risk. Someone with 90% winners, you're fired. I wouldn't even think of giving you money. Some guy with a 40% drawdown, you're fired. Happens, right? Well, then you got to change things. I've tried a lot of things in the past. What you want is low risk, steady returns, right? It's going nice now, isn't it? You want one? You want a pup? Want a pup? Nice. How are we doing on time? Oh, we got tons of time. This is awesome. I like hanging with you guys. You guys having a good Friday? I'm sorry this just turned into barroom banter between you and me. But it's Friday. Well, it's Friday morning, 10 o'clock in the morning, right? But I'm trying to screw your head on straight. So where's my buddy Carlos with the 20 million? Carlito. So he says 5%. I say 5% relative to the beta. You understand? So if it's summer, am I going to expect 5%? No. I'd be worried. So, right? So, professional investors look for risk-adjusted return, and their due diligence team will look at the risk-adjusted returns, but they look at, some sort of benchmark. Not other traders, but like volatility in the S&P 500, volatility of the 10-year Tino, I don't know, VIX or something too, right? They'll also look at the risk-free rate of return, sort of like a CAPM model, right? Do you guys know CAPM? The expected return of a stock is what you got to look at the risk-free rate of return times the what? You got beta in there anyways. I think it's a stupid formula, but whatever. Carlos, I am a man of the world. I might have to go to Hong Kong, London, Dubai, and the Caribbean in the next 5 weeks. So where do I live? I live in this office, baby. Cool. Let's do another currency pair. Okay, I want to zoom in here. I want to remind you that we said here or here is where we would sell if we were bears, right? Cool. Okay? So here's the first sell zone. Do you remember 131? 1.31000000. Okay? Lower high. And then this one may even set it off even further. We don't even know. This is a 1 minute chart, so we're shopping while we're hungry. But at some point, you're going to say that's a lower low, right? But can you see here? Would you agree? Now, remember, this isn't just a psych level. There's way more to it than that. This is a roll reversal going back to the beginning of last month, or middle of last month. Based on a lower low, back into the roll reversal. This is simple price action technical analysis. Going to a 1 minute chart, with that assumption in mind, and you're already a bear, do you guys see how this could have been tradable for you, especially since we talked about it? That 131-ish is the first level, 131.50 is the second level, not purely because of price action or psych levels, but because of price action and pivot clusters. The next one's a pivot cluster. This is not a pivot cluster. Okay? But do you understand? Can you guys see how if you had put all that together, this part is easier. I'm not going to say it's easy. Trading's never easy. But with a smart trade plan, specific, measurable, attainable, realistic, and timely, that is tradable. If you agree with me, say yes or I or yeah, boy. There's a bit of a delay in the chat, so. While I wait for that, I'm going to ask a second question. So, isn't it helpful with this trade plan that we were not thinking up at all? If you were, right? And if it had gone up, you simply just wouldn't have traded it. You see what I mean? So you're like, damn, why is this going up? Oh, someone traded off the bottom. You're like, yeah, I guess I could have bought that, but I didn't. So I didn't. So whatever. Pick the wait at the next level. If 131 didn't hold, you sit and you wait. And you're like, I wonder what happened at 131.50 at that pivot cluster. And then you see price action like this on a 1 minute chart. You see what I mean? At 131.50, you're like, oh, someone's trading the pivot cluster, so will I. Boom. Now, Peter's setting up a buy. Absolutely okay. It's just not this trade plan, right? So like I said, I don't care if you're a bull or a bear. I really don't, because I don't know any more than anybody else what the market's going to do. I know what I would do, and I know at what prices. So for example, if I was a bull, I would buy here. There is no doubt in my mind that someone down there will buy or has just purchased. Okay? No doubt in my mind there are bulls down there. I don't know how many. All I know is if I'm a bear, I want to sell high. Hang them high for all to see. So if I'm a bear, I sell at resistance. Where's the resistance? I see the resistance there. That's where a bear would sell. It's a fact. I know there are bears there. I know it. I don't have some trader's way back office stuff where I can see positions or something. Right? I'm just an analyst. Right? But I know where a bear would sell. It's common sense. It's trading. I know where traders will trade because that's what I would do if I were me. And if I were a bull, I would buy down here at the roll reversal 50% Fibonacci retracement somewhere between the 3 and 6 and 8. So I know for a fact there are bulls there. I just don't know how many. So how do you know which one to do? You have a bias. And if the market agrees with you, so if you sold because you're a bear, if everyone else agrees with you, this is going to fall, 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 fall. Doesn't mean there won't be bulls down here. It means what will happen is it'll come down, it'll go up, and then a bear would sell that, and now we're down there. So if everyone else agrees with you, or the majority of people agree with you, you will get paid. That's it. And if the majority of people don't agree with you and it does this, well, you either break even, or you either make a little bit of money, break even, or lose a little bit of money. It all washes out in the end. At the end of the year, you don't even see it. All your little pissy little winners will pay for all your pissy little losers, and the only thing that matters are the ones that you let run. You better write that down. Yeah, I feel like we needed the 3-second rule. I don't know where my book is. Anyways, I don't know. Maybe it's in here. No, I don't know where it is. I was going to read the 3-second rule from my book, but I don't know where it is. Is it up there? No. Okay. Last 10 minutes. How you doing? There you go, Robert. That's my new t-shirt. Nice, right? Ooh. Aussie yen, you want to get dirty, huh? Okay. You ready for this? This came out on the 1st of the month, right here. So if you had taken my swing trading course, right? How many people here have taken the swing trading course at fxbootcamp.com? I guess I shouldn't ask so many questions because it'll take you a while, but if you've taken it, let us know. That course suggests on this day, at this moment, if you were looking for a bullish move, it would go literally from 86.84, so we'll call it 87, to up here, 89. So it's only a couple hundred pips. So it's obviously not a lot happening on this pair. But that's the predicted move if you're a bull. So T has, Robert's taken the course, Brendan's taken the course. So, well, 3 people at least have taken the swing trading course. And they'll also tell you that if you're a bear, and boy, you can be a bear, the sell, did I get this right? Can't quite see that. Yeah, it's right there. Yeah. The sell now is right there. So I can tell you this is a healthy market. Okay? This is a healthy market. Do you know why I know? Bulls bought exactly at the right price. They bought at exactly the right price. And bears sold at exactly the correct price. I'm going to say it for a third time. Unequivocally, there is a beautiful, healthy market. Bulls buying where bulls are supposed to buy. Bears are selling where bears are supposed to sell. Completely predictable. And that's why, we were laughing earlier. I'm like, you used to sell this crap down here. Oh my gosh, it would be remember those days? And you used to buy here like, Wayne, it's been up for 5 days in a row. Yeah, now you're going to buy it at resistance, huh? Nice. Okay. So which one's going to win? I don't know. But if you did your job, you'll either not lose money, have an opportunity to make money, right? Either way, I mean, look, it still went up 100 pips. So you're crying, oh, I only made 100 pips and then I got knocked out. I cry like that a lot, right? Or you sell here. All you need now is to do your job, do it well, and if the market agrees with you, you get paid a lot of money. And if market doesn't agree with you, well, you maybe make some money, maybe you don't. But if you do your job right, I don't think you're going to lose a lot. Like, how much would you have lost if you had bought here or sold there? I mean, like, where's your big loss? Oh, well, I bet the whole farm on it. Well, then that's your problem, cowboy. Okay? So, I've been asked now, analyze the market. Well, with 1 second of analysis, I'd say, well, you'd either buy there or sell there. What's your question? Oh, well, I want to get involved in the middle. Well, therein lies your problem. If you were at Trader's Way, I would have helped you. David Attenborough, I don't know. I probably could. Alejandro? Yeah. Well, I've had a really great day. Where can you take the trading course? FXBootcamp.com. I probably haven't heard David Attenborough since I lived in Canada. Right? Is it the hello, hello, hello one? I don't even know if that's David Attenborough. It's just me doing my stupid stuff. Anyways, yes, if you want to take the swing trading course or any of the other courses, fxbootcamp.com. Thank you for being a client of Trader's Way. If you are not yet, please visit tradersway.com. And I will work with you every single day to help you improve. I will teach you. I won't do it for you. I will teach you. It's a great business model for Trader's Way. Because if you are a skilled trader, you will trade for years and years and years and years and years and years and years. Most brokers want you to pop $5 grand in an account, blow up the trading account, and go away because they don't actually put your money into the market, right? Isn't that the typical model of a broker? Bet against you. They're like, he's not going to make money. He's going to blow up the account. We'll just keep the $5 grand. Well, that's not how we do it at Traders Way. Right? Wasn't there a big broker in the United States that was a non-dealing desk? And then some news event happened, like the Swiss debacle, the SNB debacle, and all of a sudden they lost like 500 million overnight. I'm like, wait, I thought you were a non-dealing desk. I thought you put all that money into the interbank system. Traders Way never got into a problem. Why? They're an ECN. You make a trade, they put it in the market. They're not holding your money. They're not trading against you. So how is it that a broker sells it to you as a non-dealing desk, and then something weird in the market happens and they lose a bunch of money? How is that even possible? So it's in Traders Way's best interest for you to succeed and thrive for years and years and years and years and years. Well, I didn't say who. I'm just saying. It's a fact, is all I'm saying. So Traders Way never ran into a problem. Brexit, not a problem. All these things, because it's not the business model. It's a true ECN. You say, buy British pound, it goes into the interbank system, and now you hold some pound. Cool. I like that. So anyways, thank you for being a client of Traders Way. And if you're brand new, I can't wait to see you on Monday in the webinar, 7:30 a.m. There's a time change in the United States, so it'll all line up for everybody. So Monday will be a fantastic day. Thank you to FX Street for almost 12 years of doing this webinar. Thank you to FX Street. They're wonderful people. They also care about you. That's why this is a successful webinar. The people involved care about you. Yeah, Jim says you certainly can't blame the brokers. Well, there was a time, though. There was a time when the Forex market was unregulated. And there were times, though, where you would hear about, some guy at a broker. He comes out and he announces to everybody, nobody makes money today. Like, no joke, right? And there was a time where you could put up 4 different trading platforms. There was an arbitrage thing that I looked at in the early days. This is a long time. This was probably close to 20 years ago, right? That you could open up 4 different trading platforms. And remember, I always said non-farm payrolls used to jump 300 pips. Well, what would happen is 3 of the trading platforms would jump 300 pips, and the other one would drop 100 pips. Guess what they were doing? Trying to get all the sucker traders to sell, and then it would flip and jump 400 pips to catch up to the real market price. And so the unscrupulous scumbag, lying thieves, they would print a red candle and then flip it and jump it 300 pips or 400 pips to catch up and wipe everybody out, or at least all the dummies that would sell a red candle, right? So those days are long gone. But there was a time you had to worry about such things. But at an ECN, not a problem. By the way, you can have 3 different accounts at Traders Way. One advantage, you can have an ECN account if you want. You can have a variable spread, which I prefer, if you want. Or you can have a fixed spread if you want. So for example, if you're a scalper, you're probably better off on a fixed spread. Most types of trading, better off in variable. But if you prefer an ECN, right, then you can have that too. Cool. Anyways, hey, peace on earth. May the pips be with you. May your profits be above average. I had a really great day hanging with you guys. I hope it was worth your time. 3 hours is a long time. So I thank you for your loyalty and respect. And hope to see you on Monday at tradersway.com. Thank you. All right, that's it, right? Thank you.